Welcome to episode 10 of the Blockchain Immersive Podcast. In this podcast and a few to follow, I'm going to cover the different chart types that exist in the technical analysis field, more specifically using a software or a platform called tradingview.com. Now, if you took my course, Blockchains, Cryptocurrencies, and Beyond, I discussed something called technical analysis, in which you use charts to monitor the pricing and to look for patterns, because often history repeats itself. So if you see a certain pattern that came before a market collapse or a market rise, you would hope, and actually you would see, that oftentimes these patterns will reoccur again. So the first tool in technical analysis is the chart. And because there are several different charts, I cannot cover all of them in one video, so I'm going to spread this out a little bit. So in TradingView and a lot of different trading platforms, you have an option to look at your price in a different types of formats. Each format has its strengths and weaknesses. But we're going to start with the most common chart, or at least the most common chart that people used when I first started trading. People still use it, but now more people use candlesticks, and I'll get into that in another video. What we see here in front of you right now is the daily chart of Bitcoin. Now, every bar here represents one day. Now, and this is today's price, that was yesterday's, day before, so on and so forth. The green bars are the bars in which the price closed up for the day, meaning that it went up and by the next session it was higher than the previous bar. And the red bars are when it closes lower than the previous bar, the previous day. And of course, this could be any time frame. This is the daily chart, but you can also have a 5-minute chart in which every bar equals 5 minutes. So this particular chart pattern, or rather chart type, is called a bar chart because it looks like a bar. This is one big bar. Now, each part of this bar has a significance. Right here, this little notch on the left, that is the opening price for the session. And usually the sessions open around 8 p.m. Eastern. And they're pretty much continuous. So you can see like the open is the same as the close of the previous bar, but each bar essentially starts at 8 p.m. Eastern. So the left notch here is the opening price for the session. The bottom part here is the low of the session. The very top part here is the high of the session. And this little notch on the right is the close of the session. Now, the bar chart has been around forever, okay? Everyone has used it at some point, especially back in the day. And the benefit of the bar chart is that it's showing you real-time pricing. Unlike some of the other charts, there are some other charts that don't do that, they sort of aggregate the numbers. But in the bar chart, what you see is what you get. So it is a very strong representation of price action. Now, on these charts, you can find various different patterns. I'm not going to go into that right now. I'll cover that in another video, but I just want to introduce you to the different types of charts that you can use that could be of benefit to your investing and trading career. Now, I like the bar chart only because it gives me live data, but it has a lot of noise. Like between the low and the high of the day, I really don't care what's happening in between. What is important to me is where does the session end for the day? If I am long, I want it to end higher for the day. If I am short, I want it to end lower for the day. So really, my most important price really is the closing price for the session, whereas the bar chart gives you all the opening, high, low, and close. Now, there are other charts that will allow you to look at only the closing price, which is what most traders should actually be focusing on, because that is the true sentiment for the day. I mean, the market can go up and down, but where it closes for a session is the ultimate arbiter of where the prices went, right? If it closes up, that means the bulls succeeded in bringing up the market for that day. If it closes down, they were not successful and the bears prevailed. So the next chart type is called the line chart. Now, the line chart is very interesting and one that I look at, but I tend to look at other types of charts, which I'll cover in another video. The line chart is essentially a graph of only the closing prices. So it gets rid of the highs and gets rid of the lows and gets rid of the opening price and just plots the closing price. Now, the benefit of that is that you can see these trends a lot better. You can see the trends of where these closing prices occur. And for the most part, you can really track the trend nicely. So it takes some of the noise out of the market. So this is a line chart and only graphs closing prices for the session. I would use this chart only if you want to get sort of like a bird's eye view of how this market is actually moving. And for the most part, as you can see from this point, and even from this point really, but from this point, you can see overall closing prices have been high, going higher and higher despite these little corrections. Now, there is another type of chart that also deals with closing prices, and that is the area chart. The concept, it looks exactly like the line chart, but you see it fills in the gaps in between. It color codes it. So you actually see it a little bit better. But otherwise, it's not significantly different from the line chart. It's just the line chart is just the line here, whereas the area chart, colors in the space here. And that's really the only difference. But it's nice. It's a nice graphical way to show the closing prices. But again, this is not the main type of chart that I use. That I'm actually going to cover in the next video, only because it's quite involved, because it deals with candlestick charts, which are their own beast. Okay, they're very different from other types of charts, and within the candlesticks, there's many different types of charts. So the next type of chart we're going to handle, and that will be the last one for this video, is the baseline chart. Now, the baseline chart, what's good about this is that it creates like a baseline for the chart for the prices, and anything above the baseline is bullish, meaning it's going down or going up, and anything below the baseline means it is bearish and going down. So this is actually not a bad chart to use if, let's say, you're down here somewhere and you're looking to either buy or sell. If you see that you're still in the red here, you probably don't want to do a lot of buying. You might want to look for selling opportunities. So having this graphical display is actually not bad. It's actually not bad at all. But as you can see, sometimes there could be short blips here. And so you need to incorporate the baseline chart with other methods, because like you see, this is really just a false breakout. So you don't want to rely on it exclusively. So to recap, we have the bar chart that represents the full trading session for the day, the open, high, low, and close for the day, which gives you the full view of the particular trading day. We have the line chart, which only represents the closing prices, which is the most important price when you are dealing with these markets, because that's really where the market is, right? And then we have the area chart, which is essentially the line chart, but the bottom side here is filled out, color-coded. And then we finally have the baseline chart that gives you an idea of where the market is overall with the baseline that it calculates. And again, you can have these sort of false breakouts, and so you would want to use this on with other indicators. So that's just the breakdown of these charts. There's so many different ways to use them, and I will cover like very detailed ways in my technical analysis course that will be coming up soon. And I'll get into much more depth about these charts and how to use them. But I wanted to at least introduce you to the different ones and what they were, because I think some people might look at this and like, well, what's the bar chart? What is a line chart, area chart? What's the difference? So that's the difference between all of these. If I were to choose one of these, if let's say you said, you know what, I want to choose only one, I would probably use the line chart. Like I said, because it gives me the closing prices, and that's really important for most traders. And if I needed to use it in conjunction with one other chart, I'd probably use the baseline too, just so I can see overall the baseline of where the prices are. All right. I hope you enjoyed this podcast. I will see you in the next one. And in that one, I'm going to discuss additional types of charts, mostly the candlesticks. Now, the candlesticks are very important charts. They're probably some of the more accurate ones. But in the following video after that, I'm going to cover other types of charts that are equally as effective and sometimes even more so. And they might help you stay in a move longer. So that's going to be in the third video. But the next video, or podcast 11, episode 11, I will deal with the candlesticks. Until then, speak to you soon.